Then exacerbating that problem is the fact that um, the majority of those interested in Bitcoin are hodlers, right?
Mm,
So those hodlers are not influencing the day to day price. If you've got your Bitcoin in storage and you're not selling, you're not in the market day to day making a market on that bid ask spread. It's the speculators and the haters that are doing that, right? And so what you get is this very small percentage of the players in the space dictating the price.
Hey guys, welcome to the Daily Crypto. Bitcoin has been hovering on 2017 highs in recent weeks and is expected to rise to $25,500, possibly 28K resistance in the coming months. Although this would ease the bearish sentiments in the short term, is Bitcoin really the future of finance? In that case, how much regulation should the flagship cryptocurrency get? How do we increase adoption of this digital gold? Keep watching to find out as we answer these questions with the CEO of the blockchain investment group, Eric Weiss. The price of Bitcoin has kept many traders and hodlers at the edge of their seat. How important is the price of Bitcoin? Weiss responds.
It's not unimportant.
mhm.
I don't think it's so important day to day. Trends are important, and ultimately the price is important. It's important because I'm not particularly diversified in my life, and I do have expenses and things like that. So, I'd like to be in a position not to be forced to sell.
Are you irresponsibly long?
I think I am irresponsibly long. I'm not, 110% long. I don't use any leverage,
Mhm.
um, but I have a disproportionate amount of my net worth in Bitcoin.
So why did Bitcoin price fall in the recent months? Could it be what happened with Three Arrows Capital having its domino effect on the market? Weiss gives his expert analysis of the situation.
I think it was a perfect storm.
Right.
One of the big factors I think is related to big global macro hedge funds. So when we got this correlation between Bitcoin and big tech, a 3 or 4 to 1 kind of beta, as they say. So um, big tech goes up 1%, Bitcoin goes up 3 or 4%. Big tech goes down 1%, Bitcoin goes down 3 or 4%. So if you were a big hedge fund that had $1 billion of equity exposure um, in big tech and you wanted to hedge that position, you could short a $250 million worth of Bitcoin and you would be completely hedged. And borrowing Bitcoin, unfortunately, is very inexpensive, about 3% a year. So that was a very popular trade, which does a lot of things that aren't good. Number one, it creates a massive seller of Bitcoin. And number two, it reinforces that correlation.
Could this be the whole risk on, risk off thing? Weiss answers.
It's a little different. It's like if you're, pick a big hedge fund like a Tiger Global or something,
Okay.
and you've got $10 billion of equity exposure to big tech. And you're like, well, shit, I don't want to sell, my Google, Facebook, Apple, Netflix stocks here, but I want to hedge it
He continues.
$4.5 billion worth of Bitcoin or something, or two in that case, my example would have been like 200, 2.5 billion or something just to hedge equally. But you hedge by selling Bitcoin, by shorting Bitcoin. That way, um, if your tech stocks go down by 1% and your Bitcoin short goes up by 4%, the fact that you've sold 1/4 of the amount of the Bitcoin hedge as your equities, you're evenly hedged.
The correlation of Bitcoin to big tech stocks and the equity market is part of what drives the price of Bitcoin along with them. But Weiss adds that the correlation of Bitcoin to equity will break down, since it is not an equity. He continues.
That kind of sucked because we're facing a little bubble burst and obviously stock market's going down for a variety of reasons, Fed raising rates, etc. So when stocks go down, we're going down. That's the risk off kind of thing. Sell anything that you had a profit in, so to speak. We're getting hit with that. It's kind of a perfect storm. In addition to that, Bitcoin as an emerging inflation hedge. Well, yes, we have inflation. Nobody argues that there's inflation now. They argued with us for a long time, before, but now everybody acknowledges it. But the problem for Bitcoin is the Fed is addressing this. And so when you're addressing the problem, some people's assumption is the problem is going away. And they're like, well, we don't need to own the hedge anymore. If the inflation is going to go down and not be worse in the future, we don't need to own the hedge.
In that case, are hodlers of Bitcoin also the problem? Weiss weighs in on this.
And exacerbating that problem is the fact that um, the majority of those interested in Bitcoin are hodlers, right?
Mm.
So those hodlers are not influencing the day to day price. If you've got your Bitcoin in storage and you're not selling, you're not in the market day to day making a market on that bid ask spread. It's the speculators and the haters that are doing that, right? And so what you get is this very small percentage of the players in the space dictating the price.
Eric Weiss has been in the crypto sphere for quite some time now. Why is he heavily invested in cryptocurrencies? Let us briefly look at his background in finance. Eric Weiss came out of traditional finance, and his first job as an undergrad was as a U.S. government bond trader. After that, he went to Columbia Business School and then got into venture capital and private equity, where he was investing almost exclusively in companies that leveraged the internet as part of the business model. It was in the course of doing that in 2013 that he discovered Bitcoin at a conference in Miami. Weiss says that it clicked when he saw it because the internet was really good at transmitting information and data, but not so securely, and people were afraid to put credit card details into websites for a good reason. When he saw Bitcoin, this was the first time he saw that it was possible to transmit value safely and securely using the internet. And even more mind-blowing was that Party A did not have to know Party B at all. No intermediary, totally trustless. That was when Eric Weiss decided that he was going to be part of the crypto space.
When something captures the attention of an entire planet, you have to start paying attention.
At this point, one wonders, how much regulation should Bitcoin get? Weiss explains.
Everybody in the United States had the same concern, which is, oh, the government's going to take this away, regulatory issues, this is illegal, all this kind of stuff, right? And this was a very legitimate concern. There was big concern, how is China going to regulate, how's the US, all these massive nation states who are potentially threatened by this digital asset, right? How are they going to react? And it wasn't until this administration and Gary Gensler, for all of his other flaws, Treasury Secretary, et cetera, all of this started kind of moving in a more positive direction. Cynthia Lummis, awesome. And so now I think we're at a point where we don't have regulation yet, but we've got a good deal of regulatory clarity that the US government is going to regulate this in a pragmatic way. And frankly, I think Bitcoin benefits from regulation. And so that takes the single biggest risk off the table.
Some cash-strapped companies and individuals are already on board with Bitcoin, like Tesla and MicroStrategy. Have these companies had difficulty setting up their structure so they could balance the dollar with crypto?
MicroStrategy is kind of unique in the sense that it's pretty much their entire balance sheet. So investors will take the time to look through to, okay, what's the number of Bitcoin that you hold? I'll do the multiplication by the price and I'll come up with a value for that. And I can come up with a value for MicroStrategy with that as a factor plus the underlying business. But if you're, say, Apple, right? And you've got $60 billion or whatever it is on the balance sheet, and you say, yeah, I'd like to buy $5 billion worth of Bitcoin here. Well, the problem with that is if Apple goes and buys that $5 billion worth of Bitcoin and the price of Bitcoin goes from 45,000 to 20,000 and they take a massive hit on that, right? And they lose, whatever that would be, a couple $1 billion. And then the way the accounting is now, they have to mark that down. And that shows up as an operating loss, as if Apple lost money selling iPhones, right?
Right.
And so when they miss their earnings by X number of cents, right, are investors really going to take the time to parse the balance sheet and see, oh, wait, that loss was due to this Bitcoin thing, and it's not really a loss, it's a paper loss. They didn't. And the truth is probably not.
Are there any problems high net worth individuals or companies might face entering the crypto space?
In most cases, then no, they're not really.
Gap accounting in general, is the accounting method that all U.S. publicly traded companies are held to. They must comply with this GAAP accounting because it is the generally accepted accounting principles. Private companies, generally speaking, unless they are obligated, do not have to follow these rules. They should be able to buy Bitcoin and not have an issue, Weiss says. So what are the pushbacks Weiss has been getting from investors?
We live, eat, and breathe this stuff every day. They don't know about Lummis and Gillibrand and the bill. They don't know about the president's executive memorandum, you know, ordering people to regulate this pragmatically. They're not aware of these things. They might still have these misconceptions that this is going to get outlawed, and you just kind of have to update them on, well, here's where we really are. And we have bipartisan support. How many other things have you heard of in the United States that actually have bipartisan support?
Eric Weiss, the CEO of the Blockchain Investment Group, is bullish on Bitcoin in the long term, as we all should be, since it is revolutionizing the financial world with its very unique features, one of which is the decentralization of finance, and the other perks like smart contracts and DAOs, that is decentralized autonomous organizations, that are bringing a whole new level of utility for blockchains in the crypto space. Although we expect things to get worse before they get better, let's not be overwhelmed by the doom and gloom, so we fail to see the bigger picture. There is every reason to expect Bitcoin will be bullish into the future since, as you already know, it is an alternative to fiat that cannot be printed willingly and can be transferred electronically compared to assets like gold. It usually takes about 12 months for Bitcoin to bottom out, followed by a 6-month period of ups and downs. So you can go ahead and mark your calendars at mid to late 2023 for the next bull run. Thanks for watching this video. What do you think of Eric Weiss's analysis? Let us know what you think in the comments section below. Don't forget to like, share, and subscribe to our YouTube channel. See you on the next one. Until then, bye.